Okay, give me about a minute. I'm starting the recording of this, and I will start. All right, very good. Just 1 second. System is taking a few minutes. I don't know why.
Yep, no rush.
Yeah, when you do the recording, it takes a little bit of time. Okay, one more second. All right, this is Prashant Kumar. Some of you already know me, but basically what I'm going to talk about today is the role of digital marketing in syndication. Can everybody hear me well?
Yes, yes, it sounds good, at least on my end.
Okay, so Stefan, you are going to monitor the chat box. If there are any questions, please everybody feel free to ask a question if you have any.
Sounds good.
So let's get started, guys. Thank you so much for your time this evening.
Thank you.
First of all, disclaimer, this material that we are presenting today is only for entertainment purposes. Any advice that we are giving is not to be taken as it is. It has to be vetted from a professionally qualified personnel, and we don't assume, we don't expect you to rely on exactly what we are saying and then you start following that. Just a disclaimer, to cover ourselves. My name is Prashant Kumar again. I'm the president of Multifamily Realty Gains. We are specialized in B and C class undervalued multifamily assets. We typically look for C class assets in a B class market and try to come in and try to upgrade the asset either by tenant repositioning or by upgrading the management or taking care of the deferred maintenance, right? Our core values are accountability, integrity, and transparency that empowers our investors. Just a little bit about myself personally. Um, you know, I have a very strong, heavy technology and management background. I have owned single families for myself, and I own multifamily apartment units for myself, about 100 of them in my personal portfolio. In addition to that, I have been in GP capacity in many projects. Last year itself, we did about 1,200 units. And again, we bring value by removing redundancies in the process and by meticulously underwriting the deals. So we have been exploring assisted living market also, and we have invested in those projects as well, and we are continuing to invest them. Those are heavy cash flow projects. I've been a mentor and willing to share knowledge via meetups and social media interaction. We plan to do more syndications in multifamily and assisted living space in future. So there are two components of today's presentation. One is talking about the syndication steps. Let's start on that first, and then we'll go slowly into digital marketing. So what are the two most important aspects of a syndication business, right? the two most important aspects of this business are, number one is deal flow, and number two, investor, right? If you are a syndicator, you need to have a good deal flow. Uh, you should know how to get the deal flow. I mean, the deals come to you, and then you analyze them, and then you work on them basically. So how do you get the deal flow? You contact brokers, you contact sellers, um, through phone, through email marketing, or through direct mail marketing. These are the must do activities. You should have some budget aside for that. And similarly, investors, you need investors for a project, which is existing relationships, or doing via email marketing or things like that. And I'll go deeper into that. But initial steps for finding properties, you call brokers, you select cities to invest in, form your team on the ground, right? Particular area where you want to do your business in, and on the same at the same time, you are building your investor list also, right? You keep on analyzing the properties, you keep on submitting LOIs, and basically, you submit your deal, structure your deal, and you do the loan qualification. But again, each and everything that I talked in my earlier slide, that has few additional steps in it. Where do you find brokers? I mean, I would say you would go to either Craigslist or LoopNet, uh, and you go to LoopNet not to look for the properties. You go to LoopNet to find brokers who have enlisted their properties there, right? So you search for the properties in your area. You don't look for the bigger brokers. You look for the smaller brokers in the area. You establish relationship with those brokers, by phone or filling up the form on their website, so that they start sending you the listing, right? So you are connecting with the principal of the organization of the small brokerage firm, and you subscribe for the broker listing, right? And for a syndication business, it's very important that you establish relationship with as many brokers as possible. So one thing I always say is call one new broker a day, every day, right? So you are talking about in 3 months, you can have a Rolodex of 60 brokers in 3 months whom you have talked. So one broker a day, not too bad, right? One new broker a day. And when you talk to the brokers, you always remain confident. I have put in 3 slides on digital marketing here. I don't know whether that's the right place, but I will go through some syndication steps, and then I'll jump into those 3 slides. So that was not the appropriate place. So let's just go through the syndication steps very quickly. So as a syndicator, you want to, I mean, as an individual, you want to understand what are you trying to do. Are you an active investor or a passive investor? If you are a passive investor, then we're not talking about passive investing today here. We are talking about active investing, right? So as I said, you find out the location, you gather the data, pin down your market, decide the price point, and identify the role that you want to play in that area, right? In any syndication, are you willing to raise money, or are you becoming a sponsor, or you are just finding the deal and bringing to a syndicator? So we find out basically from our, we know what we can do, right? So don't jump into too many things at the same time. Identify what you really want to do. You have all that information at one place, and you have the brokers, and you are introducing yourself to those brokers basically, right? And similarly, you have like you're talking to the brokers who are bringing the property to you. You are talking to the local banks in that area where you want to invest in, right? So multiple steps. You're getting the properties, you are and you are underwriting those properties, you are submitting LOIs, but at the same time, you are starting to build relationship with, you know, with the local banks, you are with the general contract GC companies, you know, property management companies, you know. So as I said, once you have the property, you analyze, and then you are basically submitting LOIs. So continue to make notes because it's so easy to forget whom you are talking, what are you talking to, you know. So continue to make notes. Basically, again, brokers, banks, general contractors. It's a lot of work, guys. I mean, if you are new in this business, yes, it's going to take some time. It is not a get rich quick scheme. It takes time, but it is very satisfying work that we do in syndication. So there are no shortcuts, you know. When you know, so I mean, the many things that you do, you know. I had just so whenever you are submitting a LOI, you may submit 50 LOIs, and you may get response on 3 or 4 of them. So once your LOI is acknowledged, I hope that you already had offering memorandum, T12, and rent roll. These are the 3 most important documents that a broker should have given you. That helps you to analyze the property, right? So once you have LOI acknowledged, you visit the property, you know, then you continue to fine tune your numbers. Basically, you check roofs, parking lots, you know, ensure about, you know, hidden utilities, you know, water, gas, electricity. And I'm going a little bit faster. Stop me if you have any questions, because I want to go to the second portion of this presentation, which is about digital marketing, right? How digital marketing helps us. So, so you basically do the due diligence when you go visit the property. What are you looking at? You're looking at the surrounding area, right? You're looking at the surrounding area. You're looking at the property as a whole. Um, all the aspects of the property: parking lot, roofs, curb appeal. You know, how are the tenants behaving? What kind of cars are there? So you are just making notes, mental notes of everything, right? And and then you get comparables from uh, comps from broker, basically. So somebody has is asking something, I guess. Let me see, what is that? Yeah, so okay, somebody is asking me to go back. Is this what you are asking? Please confirm. As I said, you know, when you are visiting the property, most, I mean, try to have a property manager with you, right? Try to have a property manager with you, because, or a GC with you, because they are the ones who can tell you a lot of things just by looking at the property if you are not in the construction business. So moving on, basically, as I said, you know, you are looking at the property, you are comparing the notes from the broker, you have comparables, comps, we call them comps from broker, and then you are, you know, you have all the information of the property, financial, tax record, survey, things like that. So as I said, drive around, evaluate the neighborhood, you know, and find out the growth opportunity. I mean, in the property, what can you do to make it a better return for your investors, right? And continue to refine your numbers, basically. And review your underwriting with broker before submitting the PSA. One is LOI, and then second is PSA, right? Purchase and sale agreement. It's okay to submit, to send your underwriting to the broker, so that broker knows what you are offering is correct number. You are not just pulling a number from the head and then throwing at the broker. So get brokers buy-in on the number, and do the counter offer, you know, and continue to discuss that. Basically, that is the securing the contract part, right? You have secured the contract, and that's when now the due diligence process starts. So property manager will do the due diligence for you, right? Um, and once you have decided uh, the number, you have to think about the financing options. You're talking to the finance brokers, local banks, and credit unions. um, and you are negotiating that with the brokers and with the banks. So you are talking to multiple people. So you understand the magnitude of work that you are doing basically. And so then the process, I mean, we can go into the details of what you talk to them, but that's a separate ball, discussion in its own. So all finance brokers do their underwriting themselves. So whatever you have done, you share it with the lending broker. They do the underwriting and then they submit your deal to the lenders, right? So depending upon how much vacancy you have, what is the plan you decide. If you are in a bid situation, then brokers will ask for construction budget, right? And you continue to refine your construction budget till the last time, till the day when broker is willing to is about to submit that deal to the lenders, basically. So, and once the broker has submitted, they will come back with the lender, and once you have picked the lender, and lender will do their own underwriting. So again, underwriting that keeps on going on. So this is a very niche skill set. If one thing you want to learn in this business to become more comfortable, I would say learn underwriting, right? So when you have picked the lender will come and visit the property, right? They will do the environmental, they'll do the appraisal, they will do everything, lead paint, they'll prepare the package, they'll submit the package to the committee. That's lender's work, but you will be heavily involved because they will be discussing that with you, right? So, and then you will get the final approval. So far we talked about buying side. We did not talk about the investor side, but investor side had to go on at the same time, right? If it's let's say $10 million deal, you're working with the lender, you did the due diligence. At the same time, you have to start working on your pitch deck for the investors also, right? You have to start pitching your investors too, webinar, you do that webinar, you secure soft commitment, you start your conversation with your attorney, decide whether it's 506B versus 506C. It all depends on what kind of investors you have. So you are working with the attorney also. So you need to, and if it is a bigger deal and you don't have that much of net worth, you look for KP to sign on your loan, who has some liquidity also available. So you have to be on top of almost everything in this transaction. You cannot miss anything. You need to know how much investors you have, which attorney you are talking, what you are talking, what attorneys are talking. So what kind of inspection is happening, appraisal, basically. uh, you are trying to get some quotes also from GCs or PMs, and you need to strategize how to deal with the construction and repairs, right? I mean, it's a big project. You need to have a project manager, and that you should start involving from the get-go, right? So, and you need boots on the ground also. So it's like massive undertaking. Collaborate with one or more construction companies who have done similar kind of projects in past. That is very important piece. So, and it's an ongoing negotiation process. You're not just doing it once and be done, right? So negotiate with all of them, starting with, I mean, I would even negotiate with the attorney how much he charges, negotiate with the GC companies, negotiate with the lender. So, and banks, when you have putting all the paperwork, you're negotiating with the bank also at the same time. So insurance brokers, you are talking to insurance broker at the same time. So trust me, this 60 days go by so fast, it just go by, you are like deep into it. Lenders have their specific insurance requirements, uh, if any quote makes sense, lock it, you need to put some money down to lock it basically. So initially they issue the term sheet, But if it is making sense, then you put your money down so that they can start appraisal and all that stuff, inspection, things like that. So, and then, you have to start the PPM and subscription agreement, with the attorney. Attorney will set up all your companies, will set up the escrow account, start sharing PPM and so when lender is good, right? Then it will take at least 30 days. You have done your due diligence. So at that point, start sharing your PPM. It takes about 2-3 weeks, 4 weeks to write the PPM and subscription agreements. Once that is ready, you start sharing that with your investors. And typically, I say that, it just goes on. This list goes on, as I said, you can write a book on these steps. And there are a lot of good books in the market which you can read. But at a very high level, very quickly, I just wanted to walk you guys through this. And once you have, your PPM ready, you start collecting money from the investor, and then money goes into escrow. It doesn't come to you, right? So, and then, you are heading towards the closing. I typically ask investors to fund at least a week before so that, you don't have surprises at the end, right? So basically, um, it's all the steps which we talked about. They are all at the same time, right? They're all moving towards same time. So one more thing I wanted to say: if you have, if you have a raise, we typically assign 30% of general partnership for the equity part, equity partners in your project. We do that. And this little bit more details. I don't want to go into that right now. So signing on the loan depends on the deal. If it is a difficult deal, sometimes we give up to 20%. But again, that is business specific. So we'll skip that part. Again,
Prashant, sorry to interrupt. Just one question. So the 30% that you have on the slide, so that's for 30% of the sponsoring share is for a capital raiser only, right? You're not speaking as limited partner.
So we do not call them capital raisers. Typically, we call them equity partner.
Right. Yep.
The percentage that they get is not based on. That's not based on the amount that they raise. Otherwise, that is SEC against SEC rules. So you have to fix a percentage beforehand, irrespective of amount they raise. So they are equity partners, and basically, we typically allocate about 30%, anywhere from 25 to 35% for our equity partners who can bring 100% of the equity in that 30%.
Right. That's cool.
Yeah. So that's just a typical number. Some people do it 20% also, and some do 40% also. But again, it depends on the business. Everybody has a different way of doing their business. But I'm just sharing some.
Right. But that's, so if there's if there is a 70-30, let's say if there's a pref and a 70-30 split between limited and general partners, so the 30% here, essentially 30% of of those 30%.
That is correct. Yeah, 30%.
That makes sense.
30% of that 30%. And again, it depends. Sometimes your fees are included or not included. Depends on how much somebody is involved in. If he's just cutting the check, then there's no need to include them in the fees structure. So so it all depends basically.
Okay.
Makes sense. Thanks. So I'm gonna jump back to the slides that I really wanted to talk about today. Is basically about the digital marketing, right? So this is at a high level. I brought the deal to closure, but there in the digital marketing world, and again, okay. So these are a couple of slides that I wanted to talk about. So what do you do? You know, um, how are you finding the properties, right? Um, so one is, you are setting the budget aside. Basically you subscribe to the data source, and then you find the data of your area, which is of your interest. And again, there's two different aspects here. And this particular slide only talks about mom and pop owners, who have free and clear properties or high equity in the properties. So you send those companies direct mailers, right? I typically send yellow postcard, which has worked very well for me. Or you hire a calling service you start making calls. So that's one way of doing it. Then you have digital marketing. One is direct marketing. You are sending direct mailers, and you are sending you are making calls. Second is your ads. They work very well. Facebook ads, Google ads, Messenger ads, and you generate some leads through these ads. But then you have to have a budget for that, and then you are following up those leads on a regular basis. But on and here, what I wanted to talk about is um, real funnel market. Through the funnel, how does it work? And not everything is written here, so bear with me. So as a syndicator, we expect that you have a digital presence, right? You have your website, you have your Facebook, you have your LinkedIn profile set up, or YouTube, something like that. Facebook, LinkedIn, YouTube, Instagram. You can choose which one you want to do, and you create a funnel. And through the funnel, create not just one funnel, two funnels. One is for passive investors. You are very active in the social media. You are bringing traffic to your website and eventually to your funnel, basically, where depending upon where the lead is coming from, whether it is a Facebook ad, or your blog, or your website, SEO of your website, uh, or newsletter which is going out, or the podcast that you are doing, or you are appearing on the podcast for other, as a guest. Lead is coming into your funnel, right? It's a cold lead, and your lead could be of two types. One is for those who are looking for investments. Number two, those who have apartments, and apartment buildings, mom and pop owners, maybe they want to sell it too. So two different kind of funnels. Let's focus on investing funnel for a second. You are bringing the lead in your funnel, and there are various methods. As I said, you're bringing the traffic to your funnel through Facebook ads, Google ads, messengers, email marketing. You sometimes do the email marketing. You send the email to thousands of folks, wherever, and let them come to your funnel, basically. And then you are doing content marketing. You're writing blog posts. You are doing the Facebook ads, or as I said, um, putting creating value for others, basically. And once you do that, you're doing a lot of Facebook lives too. So once you do that, cold lead comes in. Now it's your job to continue to warm that lead up. And how do you do that? That is through the content marketing. And that content marketing is, you're sending them newsletters, you're sending them, not sending them, but they are getting familiar with your style, right? You are writing newsletters, and you are writing a blog in the newsletter. So they're starting to read your weekly or monthly newsletter, and they're continuing to see you on Facebooks and YouTubes, and on LinkedIn. They look at your profile. So you are warming up that lead. And when the deal comes, you are sending them the deal alert, right? So, and the most important thing is, when you are warming your lead, you are trying to set up a call with them, with your investors. That's the most important part. A lead comes in, they go through some content marketing, And then after that, you are asking them to set up a call with you. If they have set up the call with you, you discuss the goals. It's not about you selling yourself. It's about asking what investors are looking for, what kind of deals the investors are looking for. It is not about you as a syndicator. It is about them becoming comfortable with you. If you blabber too much about yourself, you have lost that lead. You let investors speak, discuss, and ask them what kind of deal would they like to invest in. So that's the approach that I take. And then when they, when they say, okay, this is the kind of deal that they would like to invest in, and whenever you have a lead, whenever you have a deal, you send the deal to them basically, and see whether they invest with you or not. So all that can be automated. I mean, you came into this picture only when you talk to that investor. Anything before this could have been automated. There is no interaction needed. As I said, you have the SEO, you have the newsletters being written, you have the Facebook. So somebody is working for you on those marketing effort, and it's when the investor is ready, they say, okay, I want to talk to the sponsor or to the person who is willing, so that I can invest with them, just to check it out. Initial call, right? And in that call, that's the time that you are spending with an investor, and you're making investor feel comfortable with you overall as a person. And if that happens, then and whenever you have the deal, you send the deal to them. So a lot of work happens in the digital marketing, but it is the preparation for the call that you have with the investor. So that's how the digital marketing works, and there are a lot of companies who know how to do this stuff very well. And I mean, I have somebody too who worked for me. Similarly, you can have a funnel for apartment sellers. You do the digital marketing. You are doing the digital marketing means you are doing the email marketing, or maybe you're sending the postcards, and the postcard has a link there too. I mean, if apartment seller is willing, if they are technology savvy, they will go to that link, they will enter their property information, or they will set up a call with you. They will say, okay, let me talk to the person who has sent me this postcard. So you have, whether you are buying that property or not, at least you have that information with you, and you are remaining in touch with those sellers over a period of time, 3 months, 6 months, year, 2 years. And whenever they are ready, because they are reading your content on a regular basis, they, guess what, they would most likely connect with you very fast. I mean, if it is in a smaller, I'm talking about a smaller apartment owners, less than 100 units. But if it's more than 100 units, then you're not, I mean, that's not going to work, because they go through brokers and all. But that's the approach that I would take. And all that is, all that is done through the digital content. I mean, there's not much interaction needed except talking to the investor and or talking to sellers. Everything else is automated. So setting all that up takes time, a couple of months easy. But once that is set up, you have somebody on your rolls to keep on managing all this for you. You are spending less time on it, and trust me, it is worth. When you have a deal, you send it to them. Uh, you will see the traction in your syndication business. So that's all I have. I mean, as I said, there are two main components of this business. One is as I said in my first slide, two main component of this business. One is deal flow, and second is investors. And if you set up the right funnel, I mean, that's an art, right? I mean, it's a science and as well as an art, how to set up the funnel, how to set up your automation. If you set them right, you spend some money upfront, then that becomes a like it takes time, but slowly it becomes like a snowball. And then you start seeing the impact of that in your business over 6 to 9 months. It takes time. I'm not saying that it can be done right away. It takes time. If we do it correctly, you can see the results, 6 to 9 months after when you finish setting this up. So yeah, that's all I have, guys. I mean, I covered a lot of stuff, and I kind of rushed through it because I wanted to um, cover it. At the same time, I wanted to answer any questions that you may have. But I hope you got some value out of what I just talked about. So are there any questions, guys? Anybody has any questions?
Yes, yeah, thanks, Prashant. That is very useful. And so you spoke like a bit on the direct marketing and the digital marketing part.
Mhm.
So what would be some key elements on the investor side in terms of that, let's say, would differ, or would it be again like building your digital, like building your website, things like that? Like what are some key principles that you use for building relationships there?
See, as I said, it's so whatever we do, our focus is just 1 second. Whatever we do, our focus is not about selling, right? We are not. Our focus is how we can do something which can create some value for others, right? So have you seen anybody coming to your door and pressing the bell? Even if you have not talked to them, you know that these guys are here to sell you something. And the first thing you are going to say, I'm not interested, without even listening to them. Does it ever happen to you guys? I would say almost all the time, right? I mean, if there is somebody who has pressed the bell, you're going to say, open the door, I'm not interested, close it. So we, in the digital marketing, that's very important concept. You have to come out in a way that you are not selling. You are asking the investors, asking what is that they are looking for, right? If somebody has set up some time with you, you are not selling what you can do. I mean, there are better people, there are bigger people in this world than you and I. So it really doesn't matter for individuals to know about you. What investors are willing to hear from you is what is that they are looking for, and can you provide that to them. So so it's all about others, not about you. So any content that you are creating should have that I would say tone, that it's not about you, it's about them, right? So the moment you have grasped that piece, whatever you are, I mean, it doesn't matter, right? I mean, who is this big guy? Nobody cares, right? So it's about what is the investor looking for. So your goal is to create the content in such a way that you are not bragging about yourself. It is about how you can help others. See, a lot of people, a lot of high net worth individual, a lot of doctors, attorneys have a lot of money. I'm not saying but those who have money, they want that money to work for them even when they are sleeping. So unless they trust you, they will not invest with you, right? So and that's the mindset we come up with. We don't come up with that we are here to sell. The money is sitting in the bank. Your content is to create the value in such a way that if you invest, you may get 8% preferred return. In real estate, that's a standard, right? 7 to 8% or 6%, whatever it is. Plus, your annual return is, as much as 17, 18% over 5 years. So if you create that kind of examples of the deal, you you share with him, with a humble attitude. And again, it's not just selling anyway, in any way. You are truly, truly, truly trying to help, but not with a selling attitude, but with a very humble attitude. And that's when you will connect with an investor. And your content, your philosophy should be congruent, in all your communication, in all your Facebook ads, of course, you cannot put a lot of flashy ads, but any content that you are posting, your philosophy should be same across the board. So that is the important part when we do the digital marketing, is our content has to be very, very humble, so to say. Make sense?
Yeah, thanks. Thanks for that. So yeah, so we have a question on the chat. So it's from Constantine actually. So what is the best structure to follow up with, with prospects from direct marketing, such as not the initial stage, but subsequently?
Yeah, so for the direct marketing, the best way of follow-upping is phone call, right? Somebody has, so I mean, if somebody has called you back, that's it. You can talk to them, and again, you're not trying to push them. If they are willing to sell, that's okay. If they are not, if they're not ready to sell, it's fine too. I mean, who knows? Maybe a year down the line they will sell you. So two weeks ago, I got a call from somebody whom I connected myself like 3 years ago, and I always talk to this individual, and he was asking for an advice, and I would just talk to them. I mean, normally, we don't have time, but we spend a lot of time talking to people, helping them out for no expectation of return, basically. And we hope that someday it will be fruitful for us. I mean, why would somebody call me after 3 years? He said, "Yeah, Mr. Kumar, I see your content all the time. We talked 2 3 years ago. I have a question for you," and I answered that question, and he was happy. And trust me, I actually got a deal like that. For a year, I kept talking to somebody. I mean, not like every day. It's like once in 2 3 months he would call, and you sort of become friends. And in that he said, "Kumar, Mr. Kumar, if I am going to sell the property, I'm going to sell it to you only." I said, "Sir, whenever you are ready, you let me know. I'll look at it." And after like a year, he said, "I'm ready." I said, "Okay, send me the PSA. I will sign it." It was like 5 minutes conversation. I bought a property from him, $2 million asset. And he sold me 10% below market price at that time. So, I mean, I'm not, yes, these are time consuming things, but we have to do it, right? I mean, we are not that big. We are not the hedge fund where we can throw $1 billion and buy the portfolio. If you buy one deal worth $2 million, 10% below market, you have already made 200,000 in that year, right? I mean, that's not the only thing that you would do. I mean, I'm just, kind of throwing it out. It does work. I mean, it has worked with me. And I sincerely hope that it works for some of you, all of you, actually.
Do you have a target percentage for earnest money deposit when purchasing deals? Like, do you aim to be like at around 1% or around 1% of purchase price? Like, do you manage your risk?
The EMD that we put in is about 1%.
About 1%. Okay. Do you do any specific clauses in terms of like that attorneys may draft for you to be protected on that side? Because I know usually that's something in terms of SEC rules, they think that's something you cannot capital raise, right? It's always your own funds.
That's not true. I mean, you can have somebody who in your project who may become part of the project as a general partner.
Mm-hmm.
and they may like to put an EMD, and they, for that you give them certain percentage of GP.
Yeah, okay.
Yeah,
So on the
so
GP side, you could.
yeah, it's not that you are raising that, but you are raising it from your general partner, and
Right.
your partner is assuming the risk. It is EMD, right? Pursuit capital. We call it pursuit capital
Mhm.
because I mean it's not just the EMD, right? Which is if the deal doesn't go through, you lose the EMD, you lose a bunch of money, in with the lenders, with the inspection, with the appraisal, you lose a bunch of money, on a deal. So, I mean, you can choose to have a general partner on your project who may be willing to invest with you when they look at the deal, they say, okay, yeah, okay, I will invest with so that and it's not. I mean, EMD money basically they get back right after the deal closes, but they still get the general partnership in the project.
Right. And do you have a target success rate, or how to say, like when doing the bidding process on multiple properties, let's say some fraction of them may fall through, like how do you
Yeah,
manage
see, EMD is, you put EMD when you are sure that you are going in this project, right?
that?
So
Mhm.
you have to make sure before in the due diligence process itself that you have 30 days to decide, by the way. You have 30 days to decide whether you want to go with this project or not, right? I mean, so that's a long time, So you are doing the due diligence, you are satisfied with the due diligence, you have talked to your contractors, right? And the deal is making sense. And and after 30 days, the only thing that could go wrong is the financial contingency. So so financial contingency is typically is a contingency that could give your money back too. But you have to
Yep.
write a PSA to secure yourself. If financing is not secured, you should know the answer from your lender within those 30 days. And again, it
Mhm.
depends on the financing. There are certain CMBS assumptions, loan assumptions, which take more than 30 days to know. They take 60 days, 90 days. There, your money doesn't get hard. I mean, so that I mean, there you don't have any control because you're not open in the market. You are assuming the loan, existing loan. So there, your money is not. I mean, it is hard from all other perspective, but financial contingency can get your money back to you. So to ensure um, you don't want to lose your capital, right? That's a fundamental rule. But do you ever lose it? Yes, it does happen. uh, we have lost some money in past that just disappear, right? I mean, it evaporates from your bank account and all your time goes waste. So
Mhm.
it does happen. But
Right, right. I understand.
like doing it, I don't. I mean,
Yeah, yeah.
yeah, I don't think anybody would like doing that.
Right. Mhm.
Yeah. So I mean, I don't know what's the. I mean, maybe
Yeah.
25%, maybe less than that. It should really be minimal, right? 5%, 10%.
Right.
So
Okay. Yeah, I think maybe as a last question I have, I don't know if other people may have a question. It's last question on the digital side, but and I know we've had a private conversation on some of that, but on the digital side, in terms of like you mentioned some of the data sources for markets you want to look at. So is it like Reonomy? I know you're using Reonomy, and that's your
yeah,
favorite source, or what other I mean, what if you may share with the rest, like what other tools are some favorites of yours?
yeah. My favorite is Reonomy.
Mm-hmm.
Primarily because it is not that expensive. It's about depends on single user, maybe $5,000 a month, year. Sorry, something like that. So it's
Mm-hmm.
not that expensive, and it gets me the data that I'm looking for. Um, then you have CoStar, you have Yardi Metrics, your listserv or something like that.
Mm-hmm.
Source, list source. So
Mm-hmm.
there are a lot of places where you can get the data from, right? And the data will cost you. So Reonomy is primarily real estate specific data. So I don't have to structure too much. It has pretty much standard. Um, I mean, it used to be cheaper than what I just mentioned, but it is, I think, per person. And don't quote me. I mean, things change. They increase their prices. CoStar and all, they are a little bit more expensive. I typically, CoStar can give me more data and a lot of data about a property. But I need that data only when I am about to get into PSA, once my LOI is accepted. So I need that data only like maybe 5% of my properties or less than that, 2%. So that I ask my broker to send it to me or some friend who already has CoStar, access, something like that. I mean, should I have the access? Should we have the access? Yes, we should in this business. Again, how much can you afford? How much do you want to spend on that data? So you have, as I said, list source, Yardi, CoStar, Rionami, and that's good enough. And then you have apartments.com for all that matter. You
Mhm.
better. So I don't go to apartments.com. You can write a script to scrape the data if you know how to do it. So that is also a possibility. You can um, so yeah, these are the ways basically.
Yeah, sounds good. That's a very good information. Okay, thank you, Prashant. So with that, if there are no more questions, we can wrap up for today. So thank you so much. Appreciate it.
Yeah, you're very welcome. Thanks for having me, guys. I really appreciate that.
Thank you.
Great.